stocks with MasterChartsTrading.com, and this is market recap for Friday, May 8th, 2020. Happy Victory in Europe Day, and please see my other video for my World War II coverage and stock market action during World War II and prior to World War II. So today's events, of course, don't forget to please hit the like button, subscribe to this channel, and share this video, obviously. Stocks are approaching retest of important resistance at 2938 for S&P and at 25310 for Dow Jones. Nasdaq already broke out. Small caps are underperforming, but healthcare and biotech are actually leading this breakout higher. Europe and emerging markets are also strongly underperforming, and we'll also look at a couple of recent trade examples at MasterChartsTrading.com, and this is for PayPal and Home Depot. We're still waiting for Federal Reserve to start buying junk bonds. Maybe they did, maybe they didn't. It's somewhat confusing, but the junk debt ETFs didn't go anywhere. Treasuries pulled back slightly. Dollar is still indecisive. Euro could be bottoming, and Bitcoin is breaking out. Okay, so let's look at our proxy for the market, S&P 500. Here's the ES1 exclamation point, S&P 500 on daily charts. So as always throughout this presentation, I'll be using my proprietary trading indicators, and I'm referring to these lines: the green, the blue, the red, and the yellow line, which you can have on your chart. How would you do that? How can you have the same lines on your chart? So number one, simply open a free account at TradingView.com. So this interface where I'm hovering, TradingView.com. Excuse me. So once that you open this account, you can head over to MasterCharts Trading, click on sign up, and then sign up for one of my services. Now you can have these same lines on the chart, on your chart. It's so easy. Don't be alarmed. It's extremely simple. I will walk you through it. It will probably take you 30 seconds, maybe less. So sign up for either trading indicators or alerts, or both alerts and trading indicators, which is probably the best deal. So this way you can have the same lines on your chart, and we can analyze the charts very simply. So here we go. Resistance, it's obviously on the chart at 2938.75. It looks like it already has been overcome here on the 29th of April, and that's why I have this up arrow here. But I think it's coming up again. We could actually gap up on Monday here. It's possible. For S&P 500 ETF SPY, same general principle, very close to a breakout level, so let's be on the lookout for a switch into the bull phase. We are already buying at MasterCharts Trading, so certain select stocks. Here's Dow Jones. Dow Jones is underperforming a little bit. S&P is already kind of closed above this line. So again, these lines they are meaningful. They have there is a way to trade using these indicators. It's actually quite easy, and I can explain it as well. So these are what's called support and resistance. Support, is if the price is above it. For example, right now the price is above the red line, so the red line would act as a support. But it is still below the blue line, so the blue line will act as a resistance. So the resistance needs to be overcome, and it is currently at 25310. In my mind, the only way to overcome resistance is to close above that level. IWM, you can see, still underperforming. The small caps are underperforming, understandably so. They have less capital in general, and then larger companies have easier way to find financing and markets as well. So currently with the COVID epidemic, we are seeing small companies decimated, and especially small businesses such as mom and pop shops as well as small chains. So this is something that would, I encourage you to look at my World War II video, because in a sense we're facing this war, and the war has come to our backyard. It's this economic pressure, it's this death from the pandemic itself. So in the United States, we were blessed not to have the war on the soil for many, many years. And right now it kind of feels like we're beginning that. We're having a conflict on the soil of the United States. But this conflict is almost like an internal. It feels like basically we just need to kind of agree on something and push for it. And we need to, first of all, agree on the thinking. We need to think in a new way. We need to stop asking the question why, stop pointing fingers, and start asking questions how and what, or what and how. What are we going to do and how we're going to do it. So this is the best advice I can give right now. So the Nasdaq actually broke out a while back on April 14th already. There's an opportunity. I sent an alert to my subscribers. This is already a profitable trade, especially if you trade in options. You're more than golden here. So within the sectors, the most strongest sector, understandably so, is healthcare right now. So XLV, this is actual alert as well here on the 9th of April. Within healthcare, biotech, XBI seem to be the most strongly performing, and these are actually all-time highs, if I'm not mistaken. Let me zoom out. Yep, these are all-time highs. We just set a new all-time high. So yes, the economy, we're seeing this just nasty numbers with unemployed, but again, if you look at my previous World War II video, you will notice that stock market and world events are two different universes. And if you want to be successful in the stock market, one thing you may need to start doing is to tune out the news. I'm not talking about living in a technical bubble, which I kind of like to do most of the time, but we need to think what is important and what is not. And the news, in a sense, make it very difficult to notice what's important and what's not. So what I keep telling my subscribers, and I keep telling these people on this channel as well, is that we need to concentrate on the chart in front of us. And the chart in front of us told us in mid-April to start buying, and that is what we did. We started buying. So again, terrible what's happening to the general economy and just the world. Is death and conflict that I think will be brewing, is brewing already, and unfortunately with just enormous amount of unemployed. So we should brace ourselves for relatively tough times ahead, and we should be thinking again in terms of new thinking. We should not be pointing fingers. We should be asking questions: how and what? What are we going to do and how we're going to do it? In this particular case, XBI biotech, pretty straightforward breakout, buy. That's all. That's all we need to know. Emerging markets are underperforming significantly. Here is EEM. This downward facing arrow is actually an alert. I would have been shorting it back then, but since then S&P 500 has broken out. So I am extremely reluctant to short anything when the S&P 500 is in an uptrend. Perhaps we will see a decoupling of various stock markets around the world from the S&P 500, and here's what I mean. Generally speaking, stocks move together with other stocks. So let's say emerging market stocks would also move together with S&P 500 in general. However, with this new reality, with this new reality of the coronavirus, the global chains, global supply chains are indeed breaking down, and we're now in a situation where we need to source things locally. So, in a sense, perhaps this lockstep of other countries and other ETFs of foreign countries is coming to an end. And perhaps right now is the time where stocks in the United States and stocks in Europe and stocks in Japan and stocks in China and stocks in Africa, wherever other countries will do their own thing. So that would mean less correlation. Will this happen? Nobody really knows. As of right this instant, I'm still treating stocks of various countries as stocks, and I want to be doing the same thing to stocks of other countries as I'm doing to stocks of the United States. In the United States, I want to be buying, but I don't really want to be buying yet emerging markets. I want to see a close above $40 here, $40.24, where I'm hovering. That's the blue line. Again, you can find out more about this at MasterChartsTrading.com, about these lines. European equities, pretty similar picture. I mean, it's kind of approaching bullish levels, but there's still a lot of work to do here. So, not yet. No, I would not be buying Europe. I mean, if anything, this is an opportunity to short here, but I am reluctant to short stocks because of the correlations that I am still perceiving. I don't know if they're going to hold in the future, these correlations. I want to highlight a few recent trades. These are actual alerts again. Home Depot. Here's one on 14th of April and another one on 24th of April. Good for about 13% gain. So this is pretty straightforward. This is the type of trades I normally do here at MasterCharts Trading. And vast majority of the time, 70% or even higher, they work out and we make money. This is an important thing. Here's a beautiful trade. It was just a huge breakout. PayPal alert was sent here on 14th of April, and you had several more days to enter. And alongside, nice 33% gain, brand new record highs. In the bear market, during the bear market, the opposite usually happens. The new lows are made. The new highs are not made during the bear market. So I think this is a valid breakout, and I think overall, again, stocks are in a bull market and an uptrend, and we want to be buying them. Junk bonds. So junk bonds, I already highlighted this. I mean, they completely collapsed from February into March. This is what we call cratered. Federal Reserve came in and said that they will be buying junk bonds between 8th of April and 9th of April 2020 here. Later it turned out that they're not yet buying stocks. So now I wonder if they will start buying stocks. Start buying junk bonds sometime in the not so distant future. If yes, then when? Since this is a transparent, supposed to be a transparent organization, the Federal Reserve. So this is a big problem, in my opinion, with junk bonds being bought by Federal Reserve, because this is extremely low-grade bonds that are very likely, of the companies that are likely to fail. So why would Federal Reserve be buying these companies? Why not start buying stocks next time there is a downturn? Yeah, maybe they will start buying stocks as well. Treasuries TLT. So Treasuries had a big run, an all-time high here in March and early March. I said, this is an actual alert as well here on 20th of March. I mean, it made money, but I still think that we need to see a little bit of this high from 9th of March being worked off. So I think we're kind of working off this overbought conditions, and we're approaching this very lucrative level here at 159.26 here, 159.26 right there where I'm hovering. Could be an opportunity if it comes down there and bottoms out. Switching gears here to the Forex universe, DXY. So you can see dollar index just kind of trading back and forth, not really doing anything out of the ordinary, you know, big movements here. Euro, which is a big component of DXY, kind of doing the same thing, but here the picture is a little more clear. At least we're definitely in a downtrend. So the downtrend began here, the latest one on the 17th of March, short there, then another one on 1st of April, opportunity, another opportunity 13th of April, successful trade, another opportunity here on the either 30th of April or on the 4th of May. So again, all of these are already successful trades. But now I wonder, maybe this is kind of getting to the bottom, because I don't see it kind of going lower than the bottom set here on 20th of March. So it's possible, maybe it's bottoming out, maybe we'll see a reversal to the upside for Euro. Finally, wrapping up, coming to an end of the presentation, here is gold futures. So gold normally moves opposite of the dollar, but of late has been kind of doing its own thing, which is a little weird, but then again, we live in weird times. So gold, the latest opportunity, a very good opportunity. In fact, I opened it myself. I still have a position open. Here's GLD. I opened it on the 23rd of March. So gold in an uptrend. Yeah, if it comes down to, let's say, currently 1593, this blue line right there, then I would be interested in buying it as well. Again, rather. And to wrap things up, here is Bitcoin. So Bitcoin, up until very recently I was bearish on Bitcoin. Now I am bullish on Bitcoin. And you need to understand that in the stock market and in trading and market in general, you cannot be married to one idea or the other. You need to be extremely flexible. A few weeks ago I was bearish, yes. And if you listen to my videos, you can say, here in April, I said, okay, now is a good opportunity to sell. Now is a good opportunity to sell. A few weeks later, on the 29th of April, now is a good opportunity to buy. In fact, I bought myself. I will show it not this time because I need to know the exact dollar amount I bought it. But I think I bought it like 8,600 or so, like right there. And that is it as far as the recap of the stock market. Again, if you have any questions, please make a comment, or you can also send me a message. Sign up, go to MasterChartsTrading.com, sign up for one of the services. You can get alerts, trading indicators, the one that I just showed, and also you can get alerts and trading indicators together. So that's probably the best deal, and this price absolutely will be going higher. So right now it's on sale at a killer price of $33 per month if you buy yearly, and this is for the full subscription, where you get both my alerts, such as for example for Bitcoin right there, and the actual indicators, so you can have these same lines, green, blue, red and yellow line, on your chart. Alright, thanks for watching and have another great trading week. Bye bye.